Well, I think the decision that we've had today actually is a good kind of first step towards that steepening process. We've got the forward guidance out there that they really had to kind of throw something to markets to keep people in the mindset that the Bank of Japan is in there and at the forefront of the monetary policy experiment. But if we look at the details, and there's a lot to digest in the documents that they put out there today. They've made a tweak to the 10-year target. The headline target rate is still at zero or around zero, but they added into the statement that yields can now go above or below that, and that's really a kind of an opening for the BOJ to allow a steepening of the yield curve further down the line. And markets now can contest that as well. We know where the line in the sand is at the moment. It's around a kind of 11 basis points, but there's now the kind of the scope for the Bank of Japan to allow a greater steepening of the yield curve should the external conditions dictate that would need to be the case. We've also had a tweak to the policy balance rate there. The headline again was unchanged. When it flashes up on your screen, you still see the negative 0.1%. But they changed the proportion of commercial banks' balances with the Bank of Japan to which that rate is applied. And into my mind, I haven't had a chance to run the numbers yet, but that looks like a kind of a tilt towards a rate hike to me. And they've also kind of signaled that ratio of the funds to which the negative rate applies, that's a kind of a new policy setting that they can adjust and probably will adjust in future. So they've changed the kind of the parameters for their policy settings, and they haven't changed the headlines, which is actually what we expected that they would do at this juncture. They've also, as you've mentioned, they've kind of tweaked the way in which the ETF purchases might happen. Again, in the statement, saying making room for more flexibility and for the Bank of Japan to respond to the conditions in markets, and perhaps to be less distortionary with respect to individual stocks, which has been a problem for a criticism that they've come over. So I really think this is the beginning of a kind of a more significant change, which is grounded in the fact that that they're kind of recognizing that the 2% inflation target still looks a very long way off, and yet we've got the external environment deteriorating with respect to China, and the potential for the US cycle to be turning down as well. So are they actually going to reach this 2% target within this cycle? I think probably not, and I think what we saw today was a switch to damage control.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.